Greetings, developers and Moralis mages. Welcome to another hackathon workshop event. I'm here today with Josh, the co-leader of Blizzard Fund and Avalanche Ecosystem Fund. And he's going to explain a little bit about how that works today. We will have time for question and answer at the end, so please hold questions until the end. And a little background on Josh. He has over 20 years experience in venture capital fundraising and exactly the person we want to be talking to about this type of thing. So take it away, Josh.
Thank you very much. And hello, everybody. Glad to be here today and happy to answer questions and kind of give some of my learnings, not just over 20 plus years, but as both an investor and an entrepreneur, but kind of just boiling it down to the things that I think you need to know and things that have changed recently in this whole space. So this is 8 things that you need to know when raising funds. So first, I'm Josh Hecht. As Phil mentioned, I co-lead the Blizzard Fund. I am based in the Cayman Islands, which is much more glamorous than it sounds. Or rather, sounds more glamorous than it is. But I was formerly with Block One, who had acquired my crypto startup, was pretty much a block producer. And there I focused on DeFi strategy and venture capital investments. Prior to that, I've worked across fintech, the broader category, fintech, M&A, and institutional finance, and have been an advisor to corporate development groups, to investors, to entrepreneurs, all things around venture finance, lean business setup, and venture exits. A little bit about Blizzard. Blizzard is relatively new. Blizzard is a $200 million plus fund that is aiming to invest across the Avalanche ecosystem and grow the Avalanche ecosystem. We are only about, we're less than 90 days into this fund. It was formed in November. And we have contributions not just from the Avalanche Foundation itself, but from some other large Avalanche investors such as Polychain, Three Arrows Capital, Dragonfly, and Republic, among many others. So we invest in early stage projects across the whole ecosystem, often focusing on DeFi, NFTs, DAOs, gaming, Web3, and much, much more. So many of you through this hackathon process may realize that you have something really cool and may need to raise money for your projects. Often this is additional capital that you need in order to launch the business, to get it to a point where it's launched and it's customer ready, or need capital to scale the business. Like you have something that's ready, but you need to take it to the next level. So what I put together are 8 helpful tips about the process. And as I briefly mentioned before, probably about 50% of this has changed in the past 2 years, not just from the pandemic, but general boom and bust cycles in crypto, as well as the emergence of Web3. And here in quick summary are the 8 things that I think you need to know. The first one is around formation, forming an actual company. Second one is about funding and the different types of funding that are available. Third one is forecasting. You will need to put together information to forecast what your business needs. Fourth, timing and what to expect. This has changed drastically. Fifth, investors, the different types of investors that are out there and how to approach them. Pitching, which is its own skill. And I'll talk about a few things on how to pitch and what you need to be prepared for. Venture evaluation. So this is kind of flipping the tables. This is how VCs evaluate you and your project. And then finally, about being active and following up on these calls, on these conversations that you have. They don't just happen by themselves. They require a lot of your input and actions. And happy to answer questions on these topics, which you can submit through the chat, and also other topics. So these are 8 that I thought you wanted to hear that would be useful, but I'm happy to address other topics as well. So the first of those 8, formation. You'll need to form a business entity. Your project is really just a hobby until it's formalized. And really what that does is it puts down into writing the ownership or the beneficiaries for it and the control of the company. I have had companies recently, or rather projects come to me recently that are fantastic, that are great ideas. They're really building well, they're executing, but they just haven't formed it into a company. It's not incorporated anywhere. It doesn't really exist except as code. And this is something that I said, go form this, and then it becomes investable. So it's one thing that you'll need to think about. Along those lines, you'll need to figure out what's the right place, the right jurisdiction for forming the company. This is particularly challenging, especially if you plan to issue tokens, and you will want to find a lawyer who is knowledgeable about that. So there's more than just deciding that you want it to form. You'll need the lawyer to figure out what is the right jurisdiction, the right place. And this applies even if you plan to be a highly decentralized project or even a DAO. Those generally do have some legal incorporated structure behind them, even if they ultimately plan to be decentralized and to a great extent in the future. Number 2, not every business is appropriate for venture capital. And there are many different types of funding. So here I talk through, or here I list a few that are out there. Bootstrapping on the left side of this slide. So you can often fund projects yourself. It's a good way to do it. You don't have to go through a lot of the pain of convincing other people to invest in you. If you have the funds to do so, it's better to do that than to necessarily get others involved. Friends and family, that's the next most common way to fund a business. Just talking to other people that you are connected to and having them invest in you. They already believe in you, and that's the main thing that you need to convince people of when you're asking for money, is that you will do good things with it. Angel investors. So those are people who are not necessarily friends and family, but who are generally high net worth individuals who can, with some talking to, invest in your company and also invest in you. Venture funds, which is where Blizzard sits, and that's what I am. It's an investment fund that's led by a team of professional investors who provide financial backing for startups. And they, including me, are looking for financial return on that. Venture studios, somewhat similar to a venture fund, but typically provides more day-to-day support to founders. Venture studios, and there are some variations on this, are kind of like a co-founder, but provide guidance such as crafting a brand and marketing strategy, or they may help develop your initial product or user experience, or through some general operational support like legal setup, accounting, or HR. Also, in terms of funding, there are different forms that it comes in. Equity and debt have been traditionally the most common forms of funding. Equity is when somebody buys a piece of your company, a piece of control or a piece of ownership interest. Debt in the venture space is much less common, but does exist, where you're essentially borrowing money. Debt can also include what's known as a convertible instrument, which means that somebody is lending you money on paper, but they don't expect to be paid back that money. They expect that sometime in the future it will convert into an ownership piece of equity. More and more, and especially for this audience, we are seeing token funding that eventually comes about. Tokens can be representing governance, they can be representing equity, they can represent pure utility, but more commonly a combination of the few. DAOs are an increasingly visible way of also finding funding. DAOs typically operate through a token swap, but some of them act kind of like distributed or decentralized venture capital funds as well. And then I note liquidity in here as well. So some projects don't require ownership of the project. They can just ask for or provide liquidity. If you're creating a market, you need people to essentially put some initial capital into that market to make it start moving. And that's another form of funding that we're seeing now. Number 3 on my 8 things, forecast your needs. So before you go to seek money, you have to know how much you need and why you need it and how you plan on spending it. This is definitely an art and not a science, but you need to project your expenses at least until you expect a positive cash flow on the business. These are typically or primarily comprised of people costs, so paying salaries for developers, and for any other types of costs, you'll want to explain how you're planning on spending them. So, for example, marketing costs. If you have money that's allocated towards marketing the business or bringing on new users or new owners, how you plan on spending that. Number 4 is setting expectations on timing of this process. Here's an area that has really changed tremendously over the past few years. Even 1 year ago, you might have expected this entire process of raising money to take 3 to 6 months to complete. Now we're seeing things very accelerated, a lot faster than they used to be. And some of these processes can take as little as 1 month end to end. But nonetheless, you need to set expectations with your team in terms of how long this is likely going to take. Make sure that you're not going to run out of money or run out of momentum, and that you've started the process early enough in the life cycle of your business, so that doesn't happen. And it's also a really a full-time job to be able to go do this. So the expectations of timing also extends to your own time. How much of your time can you allocate? How much of your team's time can you allocate towards talking with potential investors? You need to make sure that you have enough allocated to do that. Next up, my number 5, actively seek out your investors. They won't necessarily come to you. You need to actually find not just investors, but find the right investors and create a target list. And what do I mean by the right investors? You want to research even just basically and find out what do they invest in, what general industry. So Blizzard is across a couple different industries. We do gaming and we do DeFi and other types of projects, but there are certainly many VCs out there that fund only a particular subsegment of the industry. You want to look at stage. There are many that do only later stage and do not touch early stage, pre-product or pre-production. Check size. You want to see how much do they typically invest. You want to also look at comparable or competitive portfolio companies that they already have. For example, a well-known investor, Andreessen Horowitz in this space, they do not invest in competitive portfolio companies. So if they already have an automated market maker that they've invested in, if you have an automated market maker, don't waste their time. They're not going to invest in you. They don't invest in competitive companies to their portfolio. They choose one winner and they go with that. And finally, investor contacts. So you want to find places that don't require a cold introduction. Cold introductions are hard. You want to be able to network your way towards an introduction. So a friend of a friend, second or third degree of some of these investors. And those are the ones that you're more likely to garner a meeting with. Other thoughts around seeking out investors, you want to look for investors that provide some sort of value add or are a strategic partner. It's possible that you want just dumb capital, just give me your money and that's it, I'll figure out what to do with it. And those do exist, but in general, you're going to be a lot more successful if you find those investors or those partners who want to actively work with you and contribute something. Sometimes those are just connections or introductions. Other times those are deep operational pieces that they can help with. And when you're seeking out these investors, think of this as a funnel. So you need to put in a lot of things at the top in order to get out just a few results at the bottom of that funnel. So you may start with a list of 20 investors to get down to 2 or 3. Just that the nature of it, it's a numbers game. You have to get in front of a lot of people to find the right ones and to find the yes that you need. Number 6 on the list of 8, develop a pitch. If you have a light paper or a white paper or just a demo, it's not really enough. Investors really want to have slide materials if possible. Even just a handful of slides is enough that summarize what it is that you're doing. Things that won't necessarily be in a white paper or on a demo, but are more the business aspects of the company. Additionally, you want to tailor your pitch, know your audience. I had a very bad pitch that I received recently. They told me they had a great product. I was excited about it, great traction and community. And they told me they were entirely built on the Phantom blockchain. And that is an example of not tailoring their list or their pitch to Avalanche, which is the area in the ecosystem that I focus on. So just a tiny bit of research would have indicated that, hey, these guys are focused as an investor on growing the Avalanche ecosystem and not on Phantom, and we probably shouldn't waste each other's time. And then lastly, practice your pitch. Throw together a few slides, but go through them with people that you know and get some feedback on your delivery and on the slides themselves to make sure that they answer some of the key questions, which I'll get to in a moment. What are those key questions? I have seen recently some poorly or not practiced pitches that didn't reflect well on the company. And as a result, didn't proceed any further, basically because they hadn't practiced their pitch. They didn't know what they were talking about. They weren't familiar with their own stuff, and they wasted some of both of our time. So number 7, flipping the scale a little bit, or flipping the viewpoint, and understand how, at least to a little extent, how investors evaluate your project. Many will have some specific criteria that they do, or way that they say, or things that they look for. But fundamentally, they're looking at these 4 items. They're looking at the people, the team itself. Have they been in this industry? Have they done this type of work before? Are they good at convincing others to sign on or grow their community? And what's the makeup of the team? So do they have credibility in this space? Second, generally looking at the opportunity itself. So are they tackling a difficult or an interesting problem? What exactly are they doing? What does the business do in itself, and how does it make money ultimately? Third is the contexts. These are kind of the external factors. So if there are changes in the industry or regulatory changes that make this an interesting time, or an interesting space to be in at this point. And context is also kind of what's hot now. Where do we see interesting problems, and how are these people attacking that? And then finally, deal. So if all of those other boxes are checked, we still look at it as deal making. Am I likely to be able to exit this investment sometime in the future and make money for my investors? So at a greater amount that I put it in. Is the pricing and the valuation of it appropriate? Is the form of it appropriate? So we also look at the deal. This is kind of the investor view of things, and we balance these areas and kind of answering these questions when you're pitching, and understand that if you don't meet some of these criteria for a particular investor, don't take that personally. If this is really just how we evaluate things. And number 8 of my list of 8, following up. This is something that a lot of people don't realize requires a lot of emotional knowledge to know that you'll need to follow up from a lot of these meetings, from all of these meetings, I will say. You certainly want to drop a quick thank you after you've spoken to somebody, and provide any additional materials or answer any questions that were left open at the end. You want to be responsive to additional information requests that they make. So as investors are thinking about your business, they may say, oh, I'd really like to see this piece of information. I'd really like to see a demo. Make sure to respond to those requests. Update them, investors, proactively. So after you've spoken to them the first time, if there's some major development that's happened or something that you wanted to tell them about, great, drop them a line and say, oh, we've just attracted our 100th customer, or we've reached some revenue, or we've reached some other milestone. And that helps drive them towards a decision. So the more that they get excited about it, the more they hear updates, the more that you're accomplishing, that helps drive towards a decision. Realize that unfortunately, with VCs and professional investors, you are never going to be their top priority. I apologize for this. For example, I am happy to talk to lots of people about lots of deals. This week alone, I'm evaluating 18 projects. So as much as I may like one or two of those 18, I just am splitting my time across many different places. And that's why this follow-up is kind of critical, because it reminds me, oh yeah, I spoke to them, I did like them, I really want to spend some more time on that. I also put in here, this is sort of regarding the updates, but fear of missing out. I try to ignore that, but many other investors are driven by that. So if you find one investor who wants to go in on this, and you're still looking for additionals, it's great to get back and update that the one who's not committed yet, and say, oh, these other people are in. Because people often think that others are smarter than themselves, and they'll say, oh, if that guy is in, or that woman has invested, I really should be in there too, because they know something I don't know. So these follow-ups and driving the investor towards a decision, and getting them to be interested, very, very important. So this was, I want to leave some time for questions, and got through these 8 areas that I think everybody should know about with regards to fundraising. There are some topics that I did not cover, but you can ask me not just about what I spoke about, but about these additional topics. I didn't get to tokenomics. Didn't have enough time to go into deal terms, cap tables, and valuation. But feel free to ask me questions. Hopefully, questions that will benefit the whole group, and not just your own single business.
All right, let me take a look at our chat here to see if we have any early questions that we might pull up now. Lots of really great info, Josh, and interesting too. I know that almost every single one of us here has probably made a small time investment in a protocol, and it's interesting to see the overlap with priorities a lot of times, even FOMO in some cases, as we're all susceptible to those same emotions.
Yes, yes.
All right. Let's see here. Now I see, looking for specifically a question here about fundraising. We have a couple jurisdictional questions, and I guess I just want to mention that because that's going to lead back to what we were talking about in the beginning about the right jurisdiction and a lawyer. Only that conversation with a lawyer can help you determine what the right jurisdiction is for you.
Yeah, I agree. I'm not a lawyer.
Neither am I.
often asked to play one, but no, only a lawyer and the nature of your business can really answer what that is. Where is the right jurisdiction? And often we're seeing multiple jurisdictions make sense. So it's not as easy as it once was, where you just form a U.S. Delaware corporation and move forward from there. Especially with token issuances, we're seeing things like Cayman Islands and BVI, and there are differences between those places as well that are appropriate for parts of your business.
One question there I'm going to highlight for us. It's specifically asking about broker law requirement. Now, I'm not specifically familiar with that. Do you have any insights there?
Broker dealers are a specific, this might be specific to the US. Broker dealer licensing is required for certain types of financial activity. So I wouldn't say the VCs are concerned, but there are structures and different types of funds that are doing different things. One firm that I mentioned before, Andreessen Horowitz, they are fully licensed as a broker dealer, and they are able to do essentially trading and recommend investments for their clients. Blizzard, on the other hand, is set up in a different manner, where we do not actively provide investment advice to our clients. We invest on behalf of our investors, and so different types of funds are addressing it in different ways, but I wouldn't say that it's a major concern at the moment, at least in the US.
Moving on from that one, we do have one question here about USA-based Web3 startups. And I guess maybe I'll reframe that a little bit, because I know oftentimes it is more difficult to start up in the United States due to certain regulations. What's your experience with that? Do you work with any US-based startups?
Yes, absolutely. The Blizzard fund, for example, is actually a US fund. We do have ability to invest in non-US entities, and there certainly are some US-based Web3 startups. Though typically what I'm seeing is a combination of jurisdictions, where they may have substantial employees in the US, but the entity that's issuing a token, or that's doing some of these things that are not as clear regulatory wise in the US, are doing those outside the US. And again, you'll need a lawyer to find the right way to plug in or interrelate those different entities. But certainly there is good talent and good ideas in the US.
We have one here on tokenomics. I think this will lead into maybe some of the things that people have been interested about, but we didn't have time for yet. Any specific aspects of tokenomics that you're looking for when you're evaluating that area of a project in particular?
The token distribution and lockup plans are certainly something that we look at. We want to see where things are going, how people are incented to hold on to tokens. There is a great group called Avalanche that is involved, and they do a great job of providing a broader view of what they're seeing in the marketplace in terms of tokenomics. So I'd recommend looking at that as a primary source.
If you're interested in what Avalanche has to say, take a look at our workshop video with Avalanche from a couple of weeks ago. Earlier, you mentioned that investment, or the amount of time it takes to receive an investment from start to finish, has gone from 6 months all the way down to 1 month in some cases. Do you think that this pattern is going to continue at that rate? Is it going to get even faster? What are we looking at for the future?
We're still adapting to that fast cycle. It's certainly enabled by token investments as opposed to traditional investments, where we can both fund the deal using tokens as well as receive, our equity, our investment as that. So the operation around that, we're still catching up to. There's also just a great abundance of capital right now in this general space, and as such, there's a lot of people just trying to deploy money quickly, investors that are trying to deploy money quickly, and therefore they're faster to say yes, faster to make a decision. I think this will bounce around for a little while. I think we're seeing this now, that decisions and funding can be as little as a month, sometimes a little faster. But from a just risk management point of view and wanting to know how to more about each company that I invest in, we VCs in general want the cycle to be a little longer than what it is now. So I don't think it's a long-term trend that'll continue to decrease. I think it'll bounce around for a little while, but right now we're seeing a lot of fluidity.
That makes sense. Okay, moving on. Does Blizzard have some kind of accelerator program for experienced developers new in the crypto space? I have an answer on this, but I'm curious what you have to say first, Josh.
The short answer is no, but if Blizzard invests in a company, we typically connect them with other resources amongst Ava Labs, including some of the people who have done development for the core protocol. So happy to support people that are learning or want to learn more about that when we invest. And just want to mention, we may do something like this in the future, but at the moment, there's nothing in place.
Now, what I can say on that is Moralis is heavily geared to get experienced developers up to speed with Web3. And if you're looking to get started with that, check out our DAO, which you can find on Discord. If you are brand new to Moralis, a great place to start is moralis.com/mage. where you can sign up for our newsletter, learn about the DAO, more things like that, because we will help you get up to speed to the point that you'll be, hopefully a contender for one of these grants or something similar. So I'm going to put this one up on the screen because it relates to what we were talking about before. But before we dig into it, at the end of the day, this is another one where you're really going to need to consult with somebody who's a licensed attorney in your area in order to determine before. But the question is, so you mentioned that about formation of a company is important. Can I form a company in my country of residence? Will it affect the investors that come along to me? The answer lies in the details on that most of the time. Josh, do you have anything else to add to that?
It certainly can affect which investors will invest. There are certain investors that don't have expertise or legal experience in a particular region or a particular country, and don't want to spend the time to come up to speed to understand how businesses are run in some country. That said, most of Europe, US, North America, generally abide by some of the same things, and investors are comfortable with those jurisdictions.
Here's an interesting question. I'm curious myself. What's the average distribution and realization for a Web3 investment?
Distribution in terms of the sort of tokenomics and allocating those pieces.
Well, I think they might more be thinking, what is the typical grant amount, and what would be the ROI on that amount that you're expecting?
So Blizzard typically writes checks in the $1 to $10 million range. Though there are a lot, we can do smaller, we can do larger. In terms of ROI, it's all over the map. VCs in general are aiming for a return of 5 to 10x of their capital. So that's just kind of a general benchmark to think of, is that if somebody invests in my company, will they in the future be able to pull out 5 to 10x what they invested in over the span of a couple of years? And similar to the timing comments that we were talking about before, the time in between investments and what we'll call harvest has shortened greatly. So traditional venture capital funds, even just a few years ago, 5 to 7 years, sometimes more. So they would invest, and then it would take that long to get to an M&A event or to some sort of IPO. Nowadays, it's we just had one that was 6 months. So can be very fast to realize.
And that is one of the great things about the blockchain space that we work in is it's light speed. And people who aren't working in it don't get how fast we're moving. But it's amazing. It's one of the things that makes this space interesting.
Absolutely.
Any thoughts or concerns regarding IDO as a fundraising approach?
It depends on your type of company, but yes, in general, it is a reasonable way nowadays to skip over the going public process and distribute your tokens much faster into a much broader audience. And we've seen a lot of successes in that space. That said, it doesn't make sense for everybody nor every type of business. So, but in general, it is a method of exiting from a venture capital point of view, an investment.
Seeing a couple different questions that are kind of center around what sort of response time should applicants expect when reaching out for funding, and it looks like someone's asking, should they expect a response at all every time? Because if you're not interested in a project, do you take the time to let them know, or what's that process look like for people who are just getting started with it?
I try to buck the trend with Blizzard, and we really try to respond to everybody, even if we're not interested from the beginning. I do try to take a lot of meetings, so your email should, or your message should have some spark of interest that makes me want to respond. And we try not to ghost anybody, to just disappear. That said, just from the sheer volume of deal flow, occasionally it does happen. It is okay to reach out, a second time, or to follow up, as one of my 8 points was, and just say, hey, didn't hear anything. Can I interest you in this?
Something I'm gleaning from that is be your own advocate. That when you're reaching out for funding, you're not going to be just reaching out to one organization in all likelihood. You'll be reaching out to more than one, and you want to keep a record of when you followed up or when you didn't, so that you can build habits surrounding that to really, it ties in with the networking we were talking about before, which, as you mentioned, is the best way to make connections with investors, as opposed to cold calling or going in blind.
Yes, very good advice.
Let's see. How do you find investors? So we've been talking a little bit about this. A lot of times it's up to the protocols seeking funds to reach out to the investment firm. But is there ever, events that you hold where it's like a meet and greet with different protocols, or what's a good way for people to get their foot in the door on this, other than just Googling different organizations similar?
Each of those that you mentioned is actually a good method. So there certainly are conferences that are good ways to meet people just by attending the conference. There was recently a NFT conference in New York that was very, very good for that. I've attended other DeFi conferences where you just get to meet people. Networking, so talking to other people and just saying, who do you know, who did you use? And then there are some sources, but they are not excellent. So for surveying different things, so like Crunchbase is one that I'm thinking of, which is kind of like an online directory of venture investments that can help you to find some if you search for the type of business that you are. But in general, there is a lot of just digging around and finding and asking. And I mean, through this process, and when you meet one or find one, you kind of find them in groups. So for Avalanche, you'll find Blizzard, and you'll find 4 or 5 other investors, or by participating in this hackathon, even some of the sponsors. It's a good way to figure out who's investing in this space, and who are they investing with, and then go from there.
Next question here is, do you require a certain amount of seed/angel capital in place before you or another VC will come into the project? So I guess the question is, how hesitant are you to be the first investor on a project? And if you're going to be the first investor, what would help you to be comfortable with that?
So there's certainly not a hard requirement. We invest in early stage, and that includes being some of the first outside capital into a business. Not all VCs do that, but we do, because we also like to work with them to help ensure success and introduce partnerships and other companies and other relationships. So we're happy to do early stage deals. That said, I don't invest in ideas, in just an idea. So if you have this great idea, but you haven't built anything, you haven't built a community, a following, any code, anything, that's too early for a VC to look at, and too early for Blizzard as well.
And that makes sense. And that's another area where if you're at that idea stage and you're looking to flesh that out, the Moralis DAO is a great place for that. There's a lot of people there who might be interested in even working with you. And then once you have that finished product with a presentation and a white paper and all your ducks in a row, that's when it's time to look for other investors. All right, well, we've got time for maybe one more question here. And I thank you so much for your time today, Josh. I learned some things. I hope everybody else did as well. And it is exciting to talk about different ways to get your projects funded. Almost everybody here is working on something for the hackathon or otherwise. And that's the next step. Once you have a product that you're proud of, how do you take it mainstream, and how do you find the funds to do that? And very exciting and wonderful to talk with you.
Yeah, thank you, and I'm super excited to see the projects and see what comes out from this hackathon. Ready to take a look at a lot of cool things.
All right, well, everybody keep building, and we'll catch you at the next workshop.